And the way we run it, whenever we go into a venture deal where there's a lot of risk, we want it to be number one, high barrier to entry, of course. So that's why we like life sciences. But my two partners have a very strong pedigree in that. What I'm looking for are founders that have had multiple exits under their belt, Whitney. I'm not looking for a first time founder who's never come out of a lab, who doesn't know how to interact with people, who doesn't really know how to market it, because that doesn't give any sort of certainty of execution that there's going to be any sort of commercialization or marketability.
Is your daily real estate syndication show. I'm your host, Whitney Sewell. Our guest today is Sal Buscemi. He began his career at Goldman Sachs in investment banking in New York City. He's CEO and co-founding partner of HREN LLC, a private multifamily investment office, CEO of Dandrew Partners, a capital management, a number of other things. He's extremely qualified to be on the show. I'm grateful to have him back. And he's probably one guy who I know that works with more ultra high net worth families than almost anybody I know consistently, right? It's not like one or two. He is very connected to many, many high net worth, 100 million plus worth families. And he dives into that today. There's going to be a couple rules for success that he lays out right away, and even a couple lessons from Goldman Sachs in this first segment that I know you're not going to want to miss. Sal, welcome back to the show. It's been a little bit since you've been on, and man, it's already been what, a couple years ago, or maybe 3 years ago, since we were at a conference you were doing, I think, and you and I had met before that, and got to
Yes.
hang out a bit. But glad to connect with you. I'm looking forward to getting an update, man. What's been happening with you over the last year for our listeners as well? Lots been happening just in
Mhm.
man, any business that works with investors. There's a lot happening, right? Or just
Oh, yeah.
so many things unexpected or whatnot, obviously over the last year, or unexpected to some, maybe, maybe expected to others, but looking forward to diving in. And why don't you give the listeners a little update about what's the latest with you, what's your focus right now, and let's jump in.
Yeah. Yeah. So you're going to be shocked to hear this, but I had moved to Miami, and you can tell by the Formula One wear that one gets when you go to these conferences and everything. But it's been interesting. I've moved down here for the past year, and I made the cognizant decision to move to Miami because that's where it's a very cosmopolitan area to network. A lot of the families I've known since leaving Goldman Sachs are not too far away in Palm Beach. They're just a train called the Bright Line away. So that helps a lot. But the networking down here has really been a recipient, I think, of like what's happened with the Bitcoin mania and sort of like the forward movement towards moving Miami to be a tech hub spot. I don't think that's necessarily going to happen. We can get into that. I don't think that really correlates to what we're discussing here today, but it allows me to be more interactive with the investors more so than I am already with our multifamily office that I have with two other partners called HRN. HRN stands for Harlem River Navy. And it was formulated during the pandemic because it's non-real estate. Now, I know you're a real estate guy, I know, but everything I'm talking about here applies. And some people are like, well, what do you mean? I'm like, well, hold on. We do have a great Class A development we have in Vegas that we liked. And at one point, we didn't know what was going to happen during the pandemic, but it became one of those necessity businesses because everybody needs carrier air and everybody wants Milwaukee Tool. You need to have that type of infrastructure in there. So it worked out really well. And that was the last real estate deal we did. And the reason for that is because I have two partners who have helped me build this. And what we found out with the real estate families, especially the richer ones, over $100 million, that are worth their salt, is that they all have a gateway, Whitney, into life sciences, and that's through philanthropy. Now, that philanthropy is very expensive. People don't know where the dollar's going. People really don't know where the last dollar is if it's in a lab supporting a cause you might like or don't like, but it's completely different, perhaps, or delineated from what, the intent. So when families figured out that they can make the same direct private direct investments as they did in our real estate deals into these life sciences and technology companies, we really had a tremendous amount of success. And we follow two rules, and the rules are very simple for success. And some people try to overanalyze it and make themselves look smart and everything. And the way we run it, whenever we go into a venture deal where there's a lot of risk, we want it to be number one, high barrier to entry, of course. So that's why we like life sciences. But my two partners have a very strong pedigree in that. What I'm looking for are founders that have had multiple exits under their belt, Whitney. I'm not looking for a first time founder who's never come out of a lab, who doesn't know how to interact with people, who doesn't really know how to market it, because that doesn't give any sort of certainty of execution that there's going to be any sort of commercialization or marketability. That's just a broad stroke. The other broad stroke is I like to see other smart money next to me or in with me. And for some of the deals, all of the deals that we've done, there's a lead family office in there who's in kind, right? It's not like it's a real estate guy going into life sciences. These are life science family offices that are fostering runaway nuns from like the pharmaceutical convent who start their own therapies and sell it back later. And that's worked very well because it is a people business, no matter how you look at it. But the one thing that people do not like to be pitched or hear about is biology and chemistry. I was a biology and chemistry major in college. My father had a PhD in organic chemistry. I was sort of, it's into me. I, the reason why, that changed is actually the subject of the book. I don't know if I gave it to you or not, but I'll send you an autographed copy if you send me
No, I've not seen that
one.
one.
Investing legacy. Yeah, you've seen the other two, but that one I wrote right after the pandemic because there are a lot of very wealthy families and that to me, it's over 100 million investable assets that were asking questions and they had inherited a lot of money or they made a lot of money, but they did not really trust sort of the mainstream advice. So the questions would say, well, what are all the wealthy people doing? How are they investing? Real estate, venture, not all into venture, but there's a cadence there. And these guys pop and they have like $100 million exit. We're having two exits at the end of the year. Guess where I'm going to put those proceeds? About 80% of it's going to go into real estate equity and the rest goes into the other stuff. So that's sort of like the operating handbook for a lot of these families. They use the venture and then use that to get into Class A statement assets. So one of the things that we like doing is that we got into AI and we've gotten into, I told you, SpaceX because of our reputation with the families and us doing what we say we're going to do. And if anybody really wants to know our structure, our legal structure and how we put it together, you can, I guess, send me an email if that's all right, sal@hrn.llc, and I'll send you like a little video snippet of it. But, we are discretionary for our families. I do have a fund. It's doing pretty well on the venture side, but we don't like using fund structures because fund managers like myself do not like to have and Whitney, you would know this, an IRR clock to your head. The moment you take money from someone, you have to start giving them a return. And so we make it very direct and we put together a phenomenal franchise, but sort of like a system that I put together since I moved down here. And one of the things I learned, and I'll finish with this real quick, is that people really want to get into private equity and the pockets of family offices, but it's not transactional, it's relational. And a lot of people don't have the bedside manners who come from the Gary V school of hustle and they come over and before you know it, and I see it all the time. They have their iPad underneath their arm. They sit there. Hi, Whitney. How are you? Small talk is too small. And then all of a sudden he starts going into his slide. And that's not how it works anymore. And so I did put together a little booklet that's available on Amazon called Calling the Capital. You can actually get it for free too. I think it's callingthecapital.com, but there's 20 ways for people to raise capital, adding urgency without sounding desperate. And I think that's important. And we do that with deal toys and all sorts of things that we'll get into.
Love that. I I appreciate your focus on the ultra high net worth as well. I think it's a different focus, right? Than say the typical $50,000 investor, right? And it's a different business model, I think, and not everybody can just hop right into that. And I think even right now, a lot of people that are listening think, "Man, I'd love to raise money from high net worth families that are worth 100 million or more." And you hit the nail on the head there too about it being relational. And maybe bring that back a little bit, or as far as a little more elementary to say, how did you start relationships with families like this? Where did you find families like this that are, how does that begin?
Yeah. So I moved to Miami for a reason. All right. And that is because this is sort of the most cosmopolitan place between Israeli, Latin American, the LATAMs, and Europeans who come down here. And I've known these guys early in my career when I worked at Goldman Sachs. And I wrote about it in my book, The Whole Story, Investing Legacy, because everybody wants to know what that story looks like. And so those are relationships that I just fostered. And one of the things that I learned when I was at Goldman, there were two things. Number one is whatever you do, no matter what you think you are, you're always a salesman. And whether you're in mergers or this or even back office support, you are a salesperson. If you're interacting with someone else, you're helping build the brand. And on our reviews, we would actually have things on salesmanship. And the other thing too is that you're looking for a long-term relationship with these people. And in order to build that relationship, you need to really spend time with them. So the second thing I learned is nobody is going to part with their hard-earned savings without giving you their time first, right? It's different if I'm selling you a $5 book. It's not a big deal. The $50,000 guy, he's going to be a little more meaningful. He's probably, you got to think about it too, is that these people are in two different tax brackets. So the people I deal with, they have so much cash, they have to put it somewhere, right? I mean, it's just, that's really what it is. Whereas a lot of the middle class investors, their cost of capital is much higher because they pay higher taxes on it. So they're a lot more um, guarded, if you will, about where to put it. And sometimes there's analysis paralysis, and that gets into all sorts of behaviors that I'd love to divulge with you on. But you know, the that's meaningful to them. But the families, you have to understand, is there's two different types of people today. There's the middle class, which is being ephemeralized, really, unless you're a one percenter and you live on by coast, chances are you're making over $120,000 a year combined. But you know, we're dealing with families here who have had an exit or they have operating companies, Whitney, that need to be able to put cash out. And a great example of this, and they're not one of our member families, but I profile it on LinkedIn, is the Zara designer founder, Zara Fashions. Everybody knows what that is. It's become a household name. Armancio Ortega is the CEO, and he's 80 years old. And he has spent over the past year 1.3 billion in statement class quality assets, class A, right? Not B to C conversion. I mean, C to B conversion, not B to A, just paying top dollar cash. Why? Because different capital has different needs. And that's, you know, what we cater to here when I wrote that little handbook, Calling the Capital.
Yeah. Yeah. And so for the listeners saying, like I said, that would love to build those relationships with somebody like that. You
Yeah.
know, they don't
Go to
live in Miami.
conferences. No, go to conferences, participate on Zooms. I because that yeah, the more you put yourself out there, and this is the way somebody always wants to make a referral to someone. And today I met with a member of the Adidas family office, and we just met for coffee. I will always stop what I'm doing to meet with someone of consequence. And I think the highest and best use of your time to get to that point is to just be talking to investors all the time. If you have nothing going on and you want to go to bed at night feeling as though that you did something worthwhile, talk to at least three investors, new investors, old investors. It's the highest and best use of your time. But it's also those relationships are going to be like, you know what? I know this wacky guy named Sal. He's in Miami. He's from New York. He used to, you might want to meet him. And that's how it goes. And I'll tell you a story I'm not allowed to share, but it's a great story, but I'm not going to mention the name. I'll mention it to you in a text message later. All right. Because there's NDA work here. So I moved to Miami and I went and literally had a suitcase, and all I had was like two suits, and I'm in New York at my partner, Bill Workmister's MedInvest conference. And there's this goofy guy there, and he and I hit it off, and I didn't know who he was. And he was sitting there and he was asking me about the portfolio that we had. And I was telling him like the relationships we've had with the CEOs, and he wanted to know what else we were investing into. And we started pivoting into some of the deals that I really liked. And the reason why is the same reason I told you. One of the companies is called Thrive Bioscience. Thrive Bioscience is started by a friend of mine. We started an informal book club. Him, myself, and my CFO, Albert Ewan, who's a CFA. And I told him, I'm like, look, this is the CEO's 15th exit and it'll be his 8th unicorn.
Wow.
And he's like, I want to know more about this. And then he went in, and a month later, well, it wasn't a month. It was supposed to be the end of the year. It wasn't. But, you know, we had $1 million ticket from a very prominent investor that allowed us to go, because we said what we said we were going to do, pivoted us right to an allocation to SpaceX, and also working with the CEO's other family office investors that backed his last 5 or 8 companies that he's done in Palm Beach. So it's really like you being of service to people. I think too many people are like, what's in it for me? If you really want to build a relationship, treat them like you're courting them for marriage, because it is a long-term partnership, and people can smell if they like you or not. And I would, a lot of people, if you're just starting out, you really need to network. If you're living in middle America, you can be on Zoom today. I know a guy, I did a whole Zoom thing and you'll love this, but it's crazy, but it's something I might do towards the end of the year because things slow down and I get bored. This guy opened up his schedule during the pandemic. His name is Andrew Sachs. I met him here on LinkedIn, and he met with so many investors and people who could help him just by opening up and being very um, helpful on LinkedIn. He was of service to other people. And the best way to do that is to provide contacts, because contacts are an extension of your reputation, right? And I can tell you one of my rules is if I don't respect the person giving me the referral, I'm not going to take the referral because it always runs sideways. It's never what you think it is, or maybe I just put it out there, but it's a rule that works. It's a New Yorker in me. They call it the vibes or whatever. And that is what I would do. And I practice what I preach. I'm always on the phone with I have two partners, which are great as far as like doing the diligence and the sourcing for the tech and the life sciences, because that's what they do. When real estate comes around in January, we start going back into warehouse and logistics. Yeah, then I'll be a little busier, but I'm sharpening the axe right now with the investors, telling them in January, I got something up my sleeve. And I'm always using like good news. And if you really want to be aggressive, I write a book, send it to someone, autograph it, and then it compels you to call them back. Did you get the book? Can you write a record? Can you write an Amazon review? There's a reason for you to continue that conversation. That's if you really want to, like, by the end of the year, really come out really on a high note. That's some of the things I would do, and that's really what's worked. Because if you're starting out and you don't have any credibility, the most immediate form of credibility is writing a book, and you can hire someone to do that. But just make sure it's in your tone, and people need to know it's you. People who read my second book, they were like, "It's very technical. I can tell you how to copy it or go through it." The third one was written raw. And what I did was with Investing Legacy is I took a few sacred cows and slaughtered them, but I also corroborated it with people who I grew up with professionally, like ex-partners at Goldman Sachs, or I sit on the board of Genius Biotechnology, a Boston-based immunotherapy concern, with Stephen Rockefeller. And I got him on the board. And then at that point, now all of a sudden you're stacking your credibility in a way where you might not have the track record, but hey, if you're just attracting capital to give to guys like you, what's wrong with
Yeah, no, I love
that?
that.
Answer your
And
question?
I think that writing a book can seem like such a big thing to most people. Like, oh, I'm not qualified to write a book. I've only done a deal or two, whatever. What are your thoughts about really getting a book done when maybe they feel like they're not qualified to be an author?
Nobody's going to be ready to be an author, right? I mean, nobody is. I mean, who is? I wrote, I'll be honest with you. I wrote this book after my mom died. I was out in the Hamptons and I was bored, and I was with friends at the time. And I called my publisher and I said, you know what? I'm just bored. Let's just get started on the book. Like, there's only so much beer you can drink. And it just wasn't really feeling great. And we got it done, but I didn't, I was asking these same people to be in my book. They're like, who the hell are you? They didn't say that. They were like, yes. And the best way for you to do this, if you don't think you're qualified enough, say you have a deal or two under your belt, that's fine. Find other people to interview. Come up with some sort of a thesis and say, you know what? Find someone who's a little bigger than you to be in your book. It's going to be very difficult for people to say no to want to be in your book. And what happens is that all the families that are in this book, guess what happened? They all ordered author copies and handed it out to their friends, and all their friends came back to me.
Love that. That's incredible.
Get them involved. People who are more successful than you, get them involved, because that elevates your status remarkably.
Yeah, I think that's a great idea. I see it. I've heard even more so lately that the book is the new business card.
It is. I'm going to the IMN Family Office Real Estate Conference. Usually I speak at this conference. I'm going with a bag full of books, and I'm just going to sit there with a Sharpie and sign it. And I got a little carried away. I have like a bookmark that I had created, and that's just so that people can like leave a review. But I'm taking the name and business card of everybody I've given that book to. Even that book cost me $3.01 to publish on Amazon. To me, the value of it is, if this is a real family or someone I want to know, I want to make an impression on them quickly. That's something they're going to bring home with them. That's something if they skim through, they're going to see a few things that they find very interesting that they want to continue on to. And really, it's the virality of the whole thing. that makes it work. Nobody really sells books on Amazon to get rich unless you're a famous author. I wrote it because I wanted to use it as a handbook that if you wanted to come into our church, you have to understand how the conventions work.
Yeah. Yeah. Well, just so the listeners know, we're going to do a series here with Sal. We're going to do another segment for tomorrow's show as well. But before we run out of time this time, Sal, what are a couple other things that you could give the listener to be prepared, maybe to be able to add value to a high net worth family like that? What are some things? How can we be
Here's a
prepared?
story. Here's a real. So the hardest thing in the world to sell is life sciences. Okay. And we have I'll tell you one example that we use that's really attractive. And one of our companies is called Apricity Health. We're very proud of it. One of the co-founders of that is Dr. James Allison. He was a 2018 Nobel Prize winner for medicine and physiology. Now, he's doing a separate company, which is a roll down of Apricity called Bectus. And with Bectus, he's raising capital. And I came up with an idea that you're probably old enough to remember the Franklin Mint where they used to give you a chess piece. Do you remember that each month?
I
All
don't.
right. You're such a millennial. All right. Well, the people who are listening know that you could pay $12 a month through a magazine and nobody wanted to not stop it because you wanted the whole chessboard, right? Otherwise it looks like you're missing teeth on the chessboard or you quit or gave up. So what I discovered is that these people really like to have things that they can show to their friends because very wealthy people have dopamine. That doesn't mean they're agnostic to it or they're immune to it. And I said to my partner, I said, we're going to make Nobel Prize deal toys where people can put it on their desk or their coffee table. And it's a Nobel Prize with Bectus Pharmaceuticals, January 2024, written underneath it. And then I'm like, and this guy, I shouldn't say guy, someone who I think is a hero. And if you really want a tearjerker, his documentary Breakthrough by Dr. James Allison on Amazon is something you should watch with your families. And I said to these gentlemen, I said, look, we're going to go into a tough fundraising season here today. We need to really up the ante here. Okay. We need to sell status. Okay. We need to sell something quantifiable, but not really that people can put out there and show that they're smarter than the rest. And I said, if a family were to come in with a check for $1 million, could we have Dr. James Allison have lunch with that investor and their family in Austin? And then usually it takes a day to get a call back. I call back in half an hour. He said, yes, but what happens if there's two? I'm like, well, we'll have two separate lunches, right? We did this before and I'll pull it out here in my little bag of tricks, but if you go to callingthecapital.com, there's actually something that we did last summer. And wealthy people like to take their time and they take their time very seriously, especially the downtime. I haven't had that luxury yet because I really like what I'm doing. However, last August, we were given the opportunity to invest $1 million alongside a very formidable family office that has a great track record in things such as FanDuel and Fanatics, right? And there was $1 million that was left over because somebody just went away. Now, in August, how do you get someone's attention to invest in an AI company? Nobody wants to sit there and go through the work, but you have to force their hand a little bit, right? So I don't know if you follow sports or not. I don't follow sports that much. I just follow the sort of like the politics and the ownership of it. But at the time, a Russian named Abramovich had to sell the Chelsea Football Club. The newest owner of the Chelsea Football Club is an investor in this company called AI Scout. AI Scout is the preeminent privately held AI recruiting mechanism for Major League Soccer. They have Chelsea Football Club and Burnley and many others. If you go to AI.io, it's really incredible. And there's a lot of good news that's coming out. Now, with all the good news and everything and the revenues and them headlining at the Intel event with the CEO doing soccer kicks and everything during the opening of Intel, which was fun to watch. And they're probably going to do it again at AWS for Amazon. That wasn't enough, right? Because I'm with my family. The way I did it is I had to ask the CEO and I said, do me a favor. I said, can you get me autographed Chelsea Football Club jerseys for every investor from the team? And I said, it's going to be a minimum investment of $100,000. He's like, done. I'll do it.
Wow.
We were oversubscribed, and this is what it looks like all the signature pages. I know that kind of weak to see this on the, but you can see it in the book. It's not, I mean, I can tell you, and you're in the business, but that sort of greased the skid so much where people were just flying into the data room or just asking for the documents. And they were just like, they were just, boom, boom, boom. They were like, it just sucked all the air out of the room. And that's what you want to do, is to be able to credibly pull people's attention by giving them a premium or a bonus. And I know you're too young to remember this, but this is called a premium in marketing. If you study marketing, there'll be a story or a case study that comes up with Sports Illustrated almost going broke and bankrupt in October in 1986. This is like almost 40 years ago. And the one thing that saved it wasn't the swimsuit issue, because people had gotten tired of it, and it was, society was changing, and it wasn't just getting the magazine subscription. There had to be something else there. And what they did was they decided to give away, to their benefit, the football phone. And so now you and your friends were on the football phone. You'd have the cheese head, he's on the football phone, the other guy talking about the game on the football phone at the time before you were born was still hardwired to the wall. And that put Sports Illustrated into the black relatively quickly, because everybody wanted the football phone. It was the most coveted thing that year, I think, next to Cabbage Patch Kids or something equally as culturally significant. And that's really what it came down to. I mean, there were some pretty prominent families who went in there, like Sal. And so think about it. There are people who are west of the Mississippi, who figure Salt Lake, who have a Chelsea football club signed by the team in their home. Anytime family comes over, it's a conversation piece, right? Very wealthy family, real estate family, doesn't know much about soccer, probably hasn't really spent much time in Europe, but now there's a behind a glass frame. When you see these things in like those memorabilia stores, he sent me a picture of him. It's like hermetically sealed, because his son is such a fanatical soccer fan. He could not believe he had this, and it was worth that, probably a multiple of the minimum that I put on the investment. I probably should have made it more, but at this time we were like in uncharted territory, and we were like, what's going to happen? But for $100,000, people found a lot of value in that. Plus, they got to invest in a company that's growing very quickly.
They care more about that hanging on their wall and the conversations they were going to have than they did the investment. Most likely.
No, yeah, I mean, and these families, they have smart people. It's not like they're making decisions. They have like a Sal or an Albert or something who came out of a Goldman on the buy side and understands this. And again, life sciences is not my forte, but they have all guys. They're like, yeah, you know what, this checks out. This checks out. This is great. Yeah, I mean, 100,000, you get a jersey. Who cares? Like,
No,
it's not like
no.
that. No, to them, the families are not. They just want to be inside. They want to be inside deals that are with other families in kind. They don't want to be in a crowd-funded thing. They want to. They don't. Losing money is one thing, because they'll always make it back. But the embarrassment, that's what they don't want. They don't want to be caught in like an FTX thing. Like, since moving to Miami, I remember I saw Anthony Scaramucci talk about, like, he was interviewed on stage by some famous author, and he didn't really sound that credible, to be honest with you. And he, with the due diligence and everything that they didn't do, this guy he defrauded a lot of people, a lot of smart people too, which kind of really irked me a little bit, if that makes sense. And here's this guy trying to backtrack. He just didn't sound very credible. When you're dealing with these families, it's always good, and I talk about it in the handbook too, to always lead with good news. Tell me that this is the sponsor's 20th deal and he's been through 2 cycles. Tell me he puts 20% into each deal. Tell me something that another prominent investor is leading this investment that we're going into. This is the stuff that really excites it. People are not analytical. People will remember the story. I mean, think about it. People can remember the Star Wars trilogy much better than they can remember any of their own vitals as it relates to their biomarkers, right?
Yeah, no doubt.
No, really. And don't expect people to be as smart as you are, because you know what? They're not. And you got to be careful. I would say don't get too technical when you're raising capital. Let them go to the data room and do the digging on their own. All right. Just your job is to give it to them there, but not to slam them over the head with numbers, right? It's to give a story, something that they can tell their friends about. I have a friend of mine named Seth, and one week he did a rehab in a building, and he took one of my ideas and he actually went to the county records and found the old artistic drawings of the apartment building from like the late 1800s. recopied it and gave that as a deal toy to his investors, and they loved it. It's really compelling. But a lot of people don't do that. They think that they should be running their investment management firms like Franklin Templeton, where you get a letter every week where it says, "Dear friend, dear investor," and here's a statement. And nobody wants that. People are investing in personalities first before brands, and you can't have a big brand. You got to have a personality, and your brand really is your promise when you think of it.
Love that. I think it's so wise. And even you talking about keeping it simple, I think we'd have a major tendency to want to make it very complicated, thinking this very high net worth family office are going to want to know all the details right off the bat, right? Instead of sharing it through a story, just like we've all been
Yeah.
told that we should do. Sal, you shared the two rules to success. You shared two lessons from Goldman Sachs, and even the deal toys, the value of that. I think a lot of us should be thinking about that in a big way and how we can implement that personally. But even
Alibaba's your friend. I mean, you can find anything on Alibaba.
Mm.
But anyway, go ahead. I
Keeping it
digress.
simple and telling the story, even with high net worth families, 100 million plus families, keeping it simple. I think that's interesting coming from you because I think that's not what most would expect. Right. All right. So, Sal, how can listeners get in touch with you and learn more about you and your most recent book?
You can go to salvatorebuscemi.com, and there's a thing there called books. If you go to /books, go and you'll be able to see that. There's a little newsletter there. If you sign up for that'll automatically onboard you onto our multifamily office HRN. And just keep in mind, we're not doing much real estate right now, but you get to sort of see how things work inside of the teepee, how I communicate with people, the cadence and everything we do in order to call the capital efficiently so that we don't lose our reputation out in the market. So salvatorebuscemi.com /books. And you can follow me on LinkedIn. I'm not on Twitter. I just don't like it. I'm not into politics, but I am in LinkedIn. And I'm always talking my mind on LinkedIn. I know you are too as well. And you can find me on Instagram and Facebook, Salvatore Buscemi too. It's just a picture of me, black and white. And that's it. But I would love to, honestly, and people want free copies of the Calling the Capital. They can go to callingthecapital.com to get free copies of that. Well, it's also on Amazon Kindle for as low as I can offer it. And there's a paperback version, I think, for like $3, which is as cheap as Amazon will let me do it. But it will, if you stack any two of the 20 or three, it's going to increase multiples of the ability of AUM or assets under management that you're going to be able to raise.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.